Hello ladies and gentlemen, thank you for tuning into Ascending Abundance YouTube channel. My name is Pavel, I'm a CFA CPA, and on this channel I try to explore different ways of us growing capital with the existing capital we got. Stocks, real estate, crypto, business, anything that basically goes. I'm not a planner or the advisor, so please make your own research, do your own research, make your own recommendations, see your own analysis and decisions. Today I want to talk about Nvidia. Nvidia has been up on the rise. It went from 130, even lower, 120, all the way to 455 in the course of less than a year. It's a phenomenal run. Not that this does not happen. Obviously it does occasionally. Some stocks rise this high, but it's one of the biggest movers of NASDAQ. And I thought it's really interesting to see what's behind it, other than everybody's hyping about AI. Everybody knows that Nvidia's got the best chip, but how do they look financially? What do they do with the money that they make? How much do they invest in research development? How big is their pipeline? And what are they going to do with the money they're actually making? And is their valuation justified in any way? But first, let's quickly go through some of the macro financials that I like to keep tabs on. I still believe the market is somewhat overpriced, and I keep on watching total assets of the Fed on the Fed balance sheet. So this is declining. So they're selling off their treasuries and soaking up cash from the economy. However, the cash is somewhat abundantly sitting in the Fed's reverse repo facility, where the many money market funds and I would probably imagine other participants keep their excess cash. So until this facility is drained, there will be somewhat of a supply of capital that is willing to buy those treasuries that the Federal Reserve is selling. So looking at the reverse repo facility, I can clearly see that we've gone down a lot from 2.2 trillion up here just about a year ago, down to just 1.5-ish. Yes, we're 1.525. Still, $1.5 trillion is still available to purchase any kind of treasuries that are being sold by U.S. federal government as well as U.S. Federal Reserve. And because there are other participants in the market as well who might be buying those treasuries, I think we have ways to go. There is lots of excess liquidity that could still kind of soak up from the system, and at the same time not disturb the money supply too much. In a previous video, I showed that money supply is directly correlated, really closely correlated, 94% with the valuation of S&P 500 and NASDAQ. So this kind of leveling off in the last few months, starting in April up to July. We don't have August data, we certainly don't have September data yet. This has been updated August 22nd. But we are kind of leveling off with M2. It's no longer declining. I wonder what is keeping this still alive. Maybe that's still the debt ceiling that was raised in May. Maybe that's what keeps the money supply going. Not so sure. But I kind of see risks with the money supply that was going down, with the Fed soaking up liquidity. I'm a little worried about the market, and the overpriced Nvidia would drag NASDAQ lower if it were to fall. So I was a little concerned and somewhat interested to look at their financials. I do it as usual. You've probably seen my previous videos. I just go Google Nvidia Investor Relations, just click on financial reports. I'd like to look at the Forms 10K, 10Q. Those are the quarterly and annual financials. You just click on it. Let's say Q4. It comes up as a PDF file. Available to everyone. You don't need any kind of subscriptions. You can just kind of scroll here, find a section that says financial statements right here in the middle. Click on that, and just a couple of more scrolls get you to the balance sheet and the income statement. All of that information is readily available for anyone to take a look at. So I put that in Excel. I'm bringing it on the screen right now. So I put this in Excel. It's an older file that I keep for myself and various companies for many, many years. And I just like to look at the dynamics. Certainly we don't have 2024. We just got the half year, so Q2 of 2024. But if we look at the trending on the revenue side, for the last few years it was kind of flattish. Nvidia was not impressing people. In fact, it was investing somewhere its cash flow, so the net income was actually going down, and they've been heavily on the research side. But now this year they came out with the blockbuster news. Their microchip is amazing for AI and similar technologies. Their cloud, their gaming, everything is amazing. So they made 20 billion compared to the 26 in the whole year. They made 20 in 6 months. And previously they used to make 9.7. Oh, this is probably a duplication between 20 and 21. But anyway, they used to make 9 billion in the year. Now they made 8 billion in 6 months. So that's amazing news. Looking at their assets, so I'm gonna hide this. So what I keep track here is net income, income statement, balance sheet, and cash flow statements. Right. So we looked at the income statement. Let's look at their balance sheet. Their balance sheet, what I'd like to do is I'd like to remove goodwill, because some companies have a ton of, like ton of goodwill, and it's not a productive asset. It's just a measure of how much you overpaid for buying other companies, competitors, licensing, anything, for basically anything that you cannot attribute value to. It's not intangible assets, it's not the trademark, it's not the contracts with clients, it's not basically anything that you can identify reasonably that you paid for. All of this is way above. That's the multiples of the value that we paid for the acquisition, and it's somehow being kept as this phantom asset on the balance sheet. So goodwill, I remove it. I also remove current liabilities because they're typically matched with current assets. It was the company that has a lot of receivables and payables. The current assets and current liabilities kind of cancel out each other out, but they make the overall asset profile look quite big. So I removed those. I removed goodwill. We got 34-ish billion of tangible assets. I removed the liability and the current liability from the total liability. So we got 11 billion in long-term liability, and we got 23 billion in equity if I remove the goodwill. Not too bad, actually pretty good. So 0.5 debt to equity, safe, fairly conservative. I can't say they don't use debt, they do strategically. So balance sheet looks great, actually, to me. It had been. Looking at their cash flow, so what are they using their cash for? Their operating cash flow needs to be enough to spend on capital expenditures, CapEx, on the acquisitions of other companies, to pay any kind of dividends if they do, and then whatever's remaining is kind of the cash flow for financial management, what I call it. I actually look at the free cash flow, which is just the 3 total numbers, and the reason I remove capex and acquisitions from operating cash flow is because I believe the company needs to replace its assets, and it needs to continue buying some of those good competitors if it wants to grow. Because if it doesn't grow, then it's probably not going to be worth as much, and that is already embedded in the valuation of the stock. So they need to continue spending on capex and acquisitions, and therefore this operating cash flow that does not include these items would not be a fair assessment in my own model and calculation. So they got just this six months of this year, they got 8.4 billion, which is more than they made, let's say, in 2022 in the whole year. So great results, again, applause to Nvidia, but is it worth their sort of stock price? So keep on looking at it. Free cash flow, we calculated it. They purchased back some of the shares, which is fantastic. But then if you look at how the shares have been printing, it looks like in the last few years they just printed a ton of stock, and then they used it for probably executive compensation and other things like acquisitions maybe. And now they're spending their cash on acquiring those shares back. Not bad. Not fantastic. I would prefer these values to be continuously declining, not kind of going up and then going down, but it is what it is. So the free cash flow per share, this is what I really calculate, is how much of a free cash flow we got for each share of their stock, and then looking at the price of the stock, I kind of try to figure out what is the price for that free cash flow per share that we're paying. So going over the previous few years, call it this way, Nvidia has never been cheap. Like I try to aim for price to cash flow of 10 to 20, maybe 30, maybe 35, maybe for some companies that are fast growers like Adobe, that could be even 45 and 50. But companies that show 70 and 90, I kind of get suspicious. But let's compare Nvidia to itself. It used to be, say, 47, then that went up to 2000 in 2018 to 170, and at that time, if we look at the stock, it actually somewhat crashed. So if we look back into 2018, and I zoom out of today's wonderful stock performance, in 2018, when they showed this huge spike in price per cash flow, the next thing for Nvidia was actually a drop. And right now you don't even see it. It looks like a smoothish ride to the top, right? Like you don't even see this. But at the time, that was a drop from 70 something dollars down all the way to 31. So that's a huge drop. That's somebody losing, what, 60% of the value of the company. So beware when the ratio goes this high. It dropped then to 75 and kind of 70, picked up to 90, 98. Now it's 122, but that's based on a 6 months of financials. If I divide it by 2, we're at 60. So looking at the free cash flow Nvidia spins out, we can actually see that it's fairly cheap on the basis of the fact that it's always been expensive. Nvidia has always traded at huge price to cash flow ratios, and today is actually looking pretty cheap. I'm looking at their share count, I'm looking at their dividends, and I'm trying to now figure out how much are they spending on capital expenditures. Are they going to continue developing these wonderful chips that they became a profit driver for them? What are they going to spend this money on? Because right now I'm kind of looking at it and saying it's fairly cheap. So going back to Nvidia and their investor relations website, we can just continue clicking at presentations, events and presentations right here, presentations right there, and you get the last quarterly presentation, beautifully laid out, of which we could ascertain what they're going to do with it. So what are they thinking, how their segments are structured, so their financial summary. As you can see, an increase in revenue of 100% leads to 400% increase in the cash flow. So that's a wonderful business to be in and kind of reap the rewards of developing that fantastic chip. Their data center highlights, gaming highlights, professional visualization. You can clearly see from the numbers that gaming is smaller than data centers, and then personal visualization is way smaller. So we obviously want to look at, and automotive is also small. So we want to look at gaming, we want to look at predominantly data centers, and that has been a highlight for them. So I'm not going to flip through the entire presentation. Feel free to open it up and kind of look through yourself. But from there, I could see that they're promising to spend cash. Let's see if I can find it. They're promising to spend cash on, probably not, on share repurchases. So $25 billion are going to be spent on share repurchases. They're intending to keep dividends steady. The dividend is super small, but they're paying it, and they're not intending to increase it. So it looks like Nvidia is in a kind of reaping the rewards phase. They've developed something, they're generating a ton of cash flow, they don't have a lot of R&D in the pipeline to soak it up, and they're just gonna return it to investors by buying back stock, which will support the stock price even more. Even though I looked at the total market cap of Nvidia at 1.13 trillion, taking up 25 billion out of here, it's barely making a dent. It's less than like 2% of the shares outstanding, but still it's going to get a 2% uplift just from the share repurchases, and that's a welcome step. A lot of companies do that, like Apple, for example. So I'm kind of seeing the love for the shares price more than, let's say, dividends, or more than spending on additional research. That last part is a little bit concerning. I'm not big in terms of my knowledge on microchips and technology in general. I'm more of a finance and investment guy. But looking at it, I would love to see them expand more money on research, continue to promote their data centers, develop more microchips, improve their technology, and that takes money. But if they don't and they feel comfortable that they still have a good pipeline for years to come, then that's not a bad thing. So overall, on my valuation, on the basis of their balance sheet, their cash flow going to the shareholders, the fact that the ratio of free cash flow to price is fairly low historically for Nvidia, even though it's higher than, let's say, compared to Adobe or I don't know, banks or something like that. On that basis, I am thinking Nvidia is fairly cheap, and it could double from here if and only if they can continue with the momentum and continue delivering those extraordinary revenue and net income results. If they don't get stuck, they don't get sued, none of the competition catches up to them, nobody else comes up with even better technology, then they could probably double from here and still be within, well, let's say it's a 50% increase. Let's say not double. Let's say it's a 50% increase is quite possible for them to still stay, let's go back to that cash flow, still stay within the price to cash flow ratio of, let's say, 75 to 90, right? So if they're right now at roughly 60, 61, they could safely go to 90, and that would be a 50% increase in price, right? So, and if we factor in additional cash increases from more revenue and even more profit, then you know what, future is looking bright for the next couple of years. If competition starts catching up, if technologies advance, if something were to happen, this story could easily swing, and that's why it's important to potentially take some profits. If Nvidia goes up from here by say that 50%, and their pipeline of development and new products is not going to be continuously impressive, then I would look to just take profits and find myself something else to invest to, because this seemed to be getting the full attention and full value for their wonderful technologies and financial management. Thank you for listening, and do let me know what you think of Nvidia and its prospects, and where do you think it's going. Thanks so much. Have a wonderful day.